All right, welcome everyone. How are you today? So we're trying a couple different things here now. I've got this mic's for the camera. So the purpose of that is that we're going to switch up. So if I'm not projecting loud enough, let me know. So tonight we're going to have a couple different speakers. And they're going to talk about various things, and we'll talk about it shortly. So if anybody's not been to our meetup before, it's basically a very, very relaxed, open forum. So no one's going to be offended if you have to get up and leave for some other purpose, if you have another meeting. If you want to get pizza, please eat as much as you can. We don't want to leave with any pizza still here. And ask questions. So each speaker will have their own technique as how to speak, but if I'm ever speaking, if you have questions, please do not hesitate to ask me. And it's real important that we understand that everybody in the room has a different level of knowledge, and things that I know you may not know, things that you know I may not know. So the only way that we've been able to learn is to have these conversations and have these type of meetups. So again, in the future, if you want to bring people, if you like something or you want to speak, so far we've had a lot of people speaking and people calling me to speak at these events, and that's great. The more I can listen and learn, the better. So it's pretty funny today in the crazy world of crypto. So I had three speakers set, and I got two calls saying that two of the speakers couldn't speak. And then another person, August, said, hey, well, I'm going to be around, I'll speak. And so it's just that type of, is the crypto world is so unexpected. It's so Wild West, you never know what you're going to get hit with. So I just want to start off, and I start off every meetup first asking, a little bit about the knowledge in the room. So once we have that sort of knowledge base as to who we are, then we can tailor our speeches to that level. And again, we're going to have some high-level discussions at times, and we break out into, the question and answer session. Please participate, and if it's over someone's head, that's okay, because we want everybody to progress at this point, and we'll catch everybody up. It took me a long time. I don't know, a lot of you probably heard this story before, but the first article that I ever read in crypto, it was literally 80 words long. It took me 3.5 hours to read that story. And why was that the case? Because of the fact that each of the definitions was something new. So I would read it, and then they would say something like DApps. I go, what is a DApp? And then I would go read, an article that had another 10 terms that I didn't know. And slowly but surely I learned. But it took a long time. I've only been in the space since June of 2016, which feels like an eternity in this world of crypto. So anyway, how many people have been to one of this particular meetup before? So a lot of new faces. How many people have been to any meetup other than this one? Okay. All right. Does everybody understand does anybody not understand when I say crypto, what that means? And don't be scared. It's okay. Okay, good. So crypto is basically everything that is related to a distributed ledger technology. We've talked about crypto being Bitcoin. It's a digital asset. It's digital technology. So that's basically what crypto is. So what I'm going to do first, before I talk any further, I'm going to go forward and I'm going to play a 2-minute video.
Sorry, you might want to say the whole thing, cryptography, right? That's where it comes from.
Yep. Yeah, crypto is short for cryptography, but when we talk about the space, we talk about crypto. So let's watch this 2-minute video, and I've read lots and lots and lots of articles. I've read a lot of videos, but this one puts it in perspective in 2 minutes. So let's see if you sort of understand it. We'll go over to a couple definitions. If you get bored, then we'll dive right into August, and he's going to talk about some things too. So let's watch the video.
When you vote, have you ever wondered whether your ballot is actually counted? If you meet someone online, how do you know they're who they say they are? When you buy coffee that's labeled fair trade, what makes you so certain of its origin? To be sure, really sure, about any of those questions, you'd need a system where records could be stored, facts could be verified by anyone, and security is guaranteed. That way, no one could cheat the system by editing records, because everyone using the system would be watching. Systems like this are on the horizon, and the software that powers them is called a blockchain. blockchains store information across a network of personal computers, making them not just decentralized, but distributed. This means no central company or person owns the system, yet everyone can use it and help run it. This is important because it means it's difficult for any one person to take down the network or corrupt it. The people who run the system use their computer to hold bundles of records submitted by others, known as blocks, in a chronological chain. The blockchain uses a form of math called cryptography to ensure that records can't be counterfeited or changed by anyone else. You've probably heard of the blockchain's first killer app, a form of digital cash called Bitcoin that you can send to anyone, even a complete stranger. Bitcoin is different from credit cards, PayPal, or other ways to send money because there isn't a bank or financial middleman involved. Instead, people from all over the world help move the digital money by validating others' Bitcoin transactions with their personal computers, earning a small fee in the process. Bitcoin uses the blockchain by tracking records of ownership over this digital cash, so only one person can be the owner at a time and the cash can't be spent twice, like counterfeit money in the physical world can. But Bitcoin is just the beginning for blockchains. In the future, blockchains that manage and verify online data could enable us to launch companies that are entirely run by algorithms, making self-driving cars safer, help us protect our online identities, and even track the billions of devices on the Internet of Things. These innovations will change our lives forever, and it's all just beginning. To learn more about the urgent future of the blockchain, please visit iftf.org/blockchainfutureslab.
All right, so I thought that was a good depiction of what the blockchain is simply. And chances are some of you got that, some of you didn't, but that's okay. So what you should do is you learn this and you watch this video again. And a lot of the stuff I post on my website, I haven't posted this, but I will, this next week. You can always go and watch these videos again, or just call me and I'll send you my PowerPoint. I just posted it on LinkedIn and Facebook. None of this is hidden, and we'll talk about this, is that my goal here today and every day is to share as much information as possible so that the world, because I think I talked to August today, I think we're maybe 2% of the population even knows what the heck we're talking about tonight in the world. So that's kind of an interesting thing to think about, is that we're here before the rest of the world is here. And everyone's maybe heard of Bitcoin now, or a small population. I mean, a couple people the other day, I mentioned Bitcoin, they looked at me and said, what? And you're in a unique group here. So that's what I want you to understand. So we're gonna go over to a couple definitions. Again, if this is boring at all, I'm gonna go through quickly so they can get to August. But what I found is that we've had a couple meetups where people were not understanding the content of the discussion. And surprisingly, when someone did this for me, I learned things I hadn't known before. I was struggling with the concept of proof of stake and proof of work for at least 2 months, and I couldn't get it. And then finally someone said some definitions, and suddenly I understood it. So that's why I do this. It was very well received at the presentation I gave at FinTank last Thursday. So we'll give it a try. So we're going to talk about, and I may skip a couple because some may not be relevant to the conversation, but a node is basically a computer or a location that is involved in the blockchain. So nodes, remember that one visual where they showed the asteroids or the missile command sort of thing where they were popping, the distributed ledger, centralized. So these computers all over the world control the blockchain, and it's decentralized, meaning that there is no central authority. A central authority is what? A central authority is a bank. A bank is a government, a state government, a federal government. So we are what's called a decentralized world when we're talking about the blockchain, and it's controlled by the nodes all over the world. DApps, like I said before, are decentralized apps. So if you look at your phone, all those are applications. They have some useful purpose. A DApp is a decentralized app. It's built on top of the blockchain. One of the most prominent blockchains that people are building decentralized apps is Ethereum. So Ethereum is one of the largest cryptocurrencies. We talked about cyber currency and virtual currency. Right now, I view that as any of the particular coins in the world now. There's 1,546 coins. The most well-known, obviously, is Bitcoin, Ethereum, Ripple, Dash, and the other 1,542 of them. So anything that's another thing. If we have a Bitcoin, it's a Bitcoin. Anything that's not a Bitcoin is an altcoin. So it's an alternative coin or an altcoin. Blockchain we just went through. Fork's not really relevant for this discussion. Altcoin we talked about. So this is a pretty critical term here, distributed ledger technology. So everyone talks about the blockchain, but all the blockchain is a distributed ledger technology. So if it's Hyperledger or a private blockchain or a private discussion regarding ledger, it's distributed ledger technology. Internet of Things was mentioned in that video. Internet of Things is basically what's going on, and unfortunately, the person who's going to be here to talk about artificial intelligence is not, but he will be here next time to speak. But an Internet of Things is can everyone hear me, by the way? Regis, can you hear me? All right. The Internet of Things is really important in that computers talking to computers, the non-involvement of humans, technology such as autonomous vehicles, that's the Internet of Things. So computers telling another computer what to do. So absent humans is basically how I describe it. A wallet is a place to store coin, whether it's Bitcoin or altcoin. It could be on a computer. It could be on a little flash drive such as this. This is not a wallet, so don't try to steal it later. It is, in fact, something that you can take with you. And the goal, and I never give investment advice, I never give legal advice, I never give accounting advice in front of these groups. And the point is whatever you do, if you buy coin, don't leave it on the exchange. Get it off the exchange, keep your private keys separate, put it in a safe, put it somewhere special that no one else can get. But tell someone where it is, because if you can't speak or something, or you can't tell where it is, that's probably some money that's lost. So keep it off the exchange. That's what's get hacked. Open source, my favorite topic is that, and actually I was talking to one of my friend Dan's friends. What's your friend's name? The one we had drinks at Steak and Vine? Vlad. So we were talking at a group. Open source basically means, and I'll explain why that's important. Open source means that everybody can achieve it. If the blockchain is public, everybody can access it. There's no patents on the blockchain. You can access it. The code is there. Anybody can be involved. It's open source. It's trusted. Everybody can be involved in it. So we were having drinks after the last blockchain meeting here, and he gave me I told him I was going to be speaking at FinTech, and he told me, he goes, the blockchain is liberating. The blockchain is exciting. We're evolving as people. And I said, oh, that's awesome. I want to use that at FinTech. There was a big speech to 600 people that were at an event last Thursday. And I go, can I use that? He goes, of course, Phil. It's open source. And I thought that was awesome. And that's how we sort of perceive, and that's how we trust everybody. We want to be involved in this. A bubble, okay, ever since I've been involved in crypto and, that I started paying attention, Bitcoin has been in a bubble. Meaning, you've heard of the real estate bubble, the tulip mania. We've had the .com bubble, but for some reason, Bitcoin never had a chance. It's always in a bubble, and then it kept on going up, and then it dropped and go, see, it's a bubble. Anyway, I won't get my politics involved in that as it relates to crypto, but that's what it is. The space, when we talk about the space, it's the crypto space, the cryptography space. Mining and use cases, we'll talk about that. That's not relevant for discussions, but hopefully that's helpful, and I try to get that out. Any questions before we shift over to August to talk about some things? Anything? All right, so August is going to talk about Dash, which is a very, very popular coin. He's going to talk about the Dash community, which is quite amazing. And he's also going to talk about some other things in blockchain. Maybe I messed up. What I've noticed is that the young kids are the most important part of this revolution. And I really appreciate it. They come in force. They always commit to us. When we were at this event the other day downtown, sponsored by FinTech, it was the law students that came up to me, because I gave all the presentations in front of the lawyers. The law students were so enthused, and it got me so excited. It got me more excited, and I've never been more excited in my life about a space, about anything other than my kids and my wife. This is on video. And I really, really, really can't wait. And I'm getting it from all over, but I'm really getting it. And August has inspired me in the last couple months too with what he's doing. So, with August, would you come on up and speak? Thanks. So this is just purely for that. All right?
All right, cool. I'll be able to talk loud enough, hopefully. All right. So just one or like a few things I want to clarify. So with when people say crypto and cryptography, it gets its name from cryptography. So, all right. Anyway, so what exactly am I doing here, and how did I get involved? I was in the space about almost a year ago, and so over the past 12 months or so, I dove really, really deep into the space, into the industry. I learned as much as I could, and I almost thought it was too good to be true. I was like, there's no way that it has these capabilities. And then the more and more I learned about it, the more I realized, no, it does. And the more I even came up with ideas on how to apply it. And so then it got me thinking, well, what can I do to help other people potentially realize that? And also, in the process, what can I do to maybe help out some people along the way? And so I put together these coding classes at Park Junior High, and Tarasik, Andrew, he was actually one of our mentors, and so we taught kids how to code. And so that was one of my interests, and I got really interested into the whole blockchain, cryptocurrency industry, and like, how can I combine these two? And so I created something called a proposal that I submitted to the Dash community, and it was voted on and funded. And so let me just go into a little bit of, I guess, kind of background of what exactly is Dash and why is it different than some of the others, and why it's kind of overlooked by a lot of people. So when you're reading articles and you're scrolling through, if you ever go on the subreddit for r/cryptocurrency, you'll see that it is oftentimes dismissed. People overlook it, people don't. A lot of times I attribute that to misunderstanding or not being able to, I guess, understand really the why and how behind it. So you'll notice that a lot of times the specific features for Dash, you might say, oh, well, this cryptocurrency does this, and this cryptocurrency does that, and this does that. And the point is that it's not something that is totally revolutionary or new. What it is something that works, and it's something that works really, really well, and they've solved a lot of the problems that cryptocurrencies are kind of just waiting to solve, or they're thinking that they can solve it with another coin. And so how Dash is a little bit different, it's a two-tiered network. So it has the proof of work model and it has a proof of stake model. And so the issue with proof of work is that it's really difficult to solve the scaling issue, meaning that it's hard to make decisions for the network, it's hard to develop for the network, and it's also hard to make it cheap for people to use. So as proof of work, if you look at Bitcoin, for example, the transaction times and the transaction fees are so high that it's not even reliable to use as a payment option. Yeah, not anymore. Exactly. But yeah, there was a time.
It's below $1 again %.
It is.
Let's see if we just.
Let's see.
How's that?
Alrighty. Let's see. Check 1, 2. Check.
Here?
Check. 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 Oh well.
That's okay.
And so what Dash does is they combine the proof of work algorithm.
Hold on just a second. Go ahead.
And plus, there we go. Alrighty. So they use a proof of work model, and that enables, again, like that, the decentralization enables anybody to get involved. But in addition to that, and how they are able to make decisions for the network, they have a proof of stake model. And there are issues with both of these, but when you combine them, you can get them to work pretty well together. And so there are these coins called masternode coins, and so that is what Dash is. And so what that basically means is that for the miner, when the miner mines a cryptocurrency like Bitcoin, they get 100% of the mining reward. Whereas in Dash, 45% of the miner's reward goes to the miner, 45% goes to processing transaction fees, and then 10% goes into something called a monthly treasury system. And so that 45% that processes transactions, that makes it so that it's so minimal, that makes it so that the transaction cost is very, very low. So you can have a transaction that's less than or around 1 or 2 cents. Additionally, that 10% that is left over goes into the development of the coin, and it also goes into proposals that community members can submit. So again, that is why I am here. I submitted an idea to the proposal system, and the 10% of the coins that were mined for that month, the community or the network basically decides what proposals to fund. And so my proposal was one of those. And how they make that decision on what proposals to fund, that is done by the proof of stake model. So they actually have, you can think of them as essentially the investors. So to have a stake into it, you have to have 1,000 Dash. And so that's like that's your incentive to make a good decision, meaning that every time somebody votes on a decision for the network, because of that essentially 1,000 Dash collateral, you're incentivized to make a decision that will help the network. And so what that means when I say when you put 1,000 Dash to stake, that doesn't mean that they take it away from you. It doesn't mean that it's locked in. You can take that out anytime. The difference is that if you have a masternode or that 1,000 Dash, you actually can process transactions, and you actually get rewarded for doing so. And so for staking your 1,000 Dash, you get essentially you get payments for processing transactions. And so how is it different than miners processing transactions? Well, with the stake model, you can basically enable insta-send confirmations. And so instead of having the miners confirm a transaction, if you enable insta-send on a transaction, it gets broadcasted to essentially a random group of the master nodes to instantly confirm that transaction. So why is this important? Because we now have something that is very viable as a actual payment processor. And my kind of philosophy is, why invent the same thing like a million different times? Why not have something that works really well and it does what it's intended to do? And so that is kind of my synopsis of Dash, and it's through this kind of community support that they are able to actually fund ideas. They are able to fund projects, fund integrations, fund marketing. They do the advertisements, and everything is done through the community. So anybody can just submit a proposal. And so just talking a little bit more about the proposal system, to submit an idea, it requires stake as well. So it requires 5 Dash to submit an idea to the network. And that 5 Dash is essentially, it's burned or it's destroyed, which is kind of a weird concept. But that's kind of like your stake, because if all these other people are going to read through your idea, they don't want it to be spammed. They don't want anybody just to be able to submit something. So that's kind of like what the requirement is. And so I learned about that, and I saw a lot of opportunities with that. And what's really interesting is cryptocurrency or blockchain, it eliminates that need for trust, meaning that you don't have to cross your fingers and hope that somebody will pay you back, or hope that this person will follow through. You can actually cryptographically prove that this transaction or this payment is legitimate. Now, the interesting thing is, why I'm kind of bringing this up is with Dash, I couldn't really do that. I submitted an idea, and essentially the community had to trust that I would follow through on this. So it is flawed, but in a way, it's almost like refreshing. It's like in a space where you can't trust anyone. Here, this is a community that part of their budgeting is essentially trusting people to follow through on their ideas. And so where does that bring me here today? Well, I think that partially that might be flawed, but I think that over time people can prove themselves and people can generate a track record. And so I thought, well, how can I prove this? Because part of the issue was people would submit these ideas, right? They would get funded, they'd be really, really good ideas, then all of a sudden they would disappear. And then nobody would know like where these people go. And so it wasn't very efficient, meaning that people's proposals would get funded and they wouldn't follow through. So what I did was create a plan for essentially a way to encourage people to hold themselves accountable. And I thought, well, what better approach than to potentially involve students? So then I thought to myself, well, I'm a student, I love to learn. How can I encourage other people to learn? How can I encourage them to take ownership of their own education? And so what we've created with Bit to Byte is essentially a miniature grant system for students. So we've taken abstractions or kind of parallels of what we've learned from Dash and cryptocurrencies and blockchain, and we're applying that to essentially a learning movement, meaning that by going to college, I looked around me and I realized, wow, there are a lot of people who are really smart and really devoted to their education, and there are a lot of people who are just here because their parents told them to be here. And I'm like, that is an issue, and I can't just go up to that person and say, yo, you need to own your own education. And so what we've created is essentially a student organization that funds student ideas. So we fund student projects, we fund student research, we fund events, and we fund student scholarships. And so we allow students to submit proposals to us, basically a document or this little mini grant, and we fund student projects, and what we get in return is essentially documentation, or we get them to ask themselves what they learned and why they did it. So we allow students to share their ideas, help make them a reality, and then connect them to a network of mentors, a network of teachers and other students. So you're like, well, how do you build a revenue model off of that if you're just giving out funds? And so with that, we do different things to kind of counteract this idea of just giving out grants to students. So what we ask for students to do for us is, if they're doing a project, we want them to document their process. We want them to explain or reflect on what worked, what didn't work. We then ask them to create a mini curriculum or a presentation that they upload to our platform. And we then use this as essentially a curriculum or many little mini lessons that other students can learn from. So by funding one student's idea or one student's project, we can then enable them to publicize, share their results, and then another student across the world can learn from it. And we do that with all of our other budget categories. So with events, with scholarships, a scholarship format that we're doing, we're actually enabling students to submit a monthly report about their learning, about their education, about what they're doing to grow as a student or as a professional. And they compile essentially a report of what they're doing to learn, and then we give out scholarships on like a monthly basis. So instead of just the old way of thinking of scholarships, oh, I run a company and I'm going to give out $10,000 to this student because he wrote this essay. Well, that might look good for me, the company, but for that student, how do I know that they're going to follow through on their education? How do I know if they're even going to use it for their education? So what we've created is an incentive to hold the student accountable for their own development. And so by combining that with cryptocurrency and with blockchain, now we can create essentially a public ledger of all of the projects, events, the scholarships, the grants, the research that we fund, and it's open to the community. The community can see it, students can see it, they can learn from it, they can grow, they can iterate off of it, they can refine other students' ideas, and I guess in summation, what it creates is a network or community of students that encourages them or incentivizes them to learn, but to also help others learn. And so, again, it's all these abstractions from cryptocurrency into the educational space. And so now that we have blockchain, if somebody wants to make a donation, to our organization, they could actually track their $10 donation and see what student project they fund, or they can see what student they're enabling to go to college. And so they can see that. And so it's very transparent. And so that's kind of our model. And so what we are doing now is we are working with students across the U.S., trying to get them to collaborate, work together, share projects, and we're trying to streamline as much as we can. So if a student has an event, we get them to create an event template so that 6 other universities across the United States can then take that event and apply it. Same with a project, same with a workshop. We do educational blockchain events, and we try to create essentially templates or we try to streamline it so that other students can learn from it and try it out for themselves. So just to reiterate, it's about making the same way that cryptocurrency makes the individual user their own bank, making them own their own, be in charge of essentially their own, being their own bank, we are making the student become their own teacher and become other people's teachers. And so, in owning their own education. So that's kind of some of the parallels that we are trying out. And we've seen a ton of success so far, and we've been getting a huge amount of interest from students across the United States. We've been getting just a ton of support to make this a reality, because the fact of the matter is, it will help a lot of people along the way, and we now have a technology that allows us to show that help, to tangibly show the effects that we're having, the impacts that one college kid maybe is having on a student that he mentors or teaches. And then you can visualize and see the impacts that those students are having on other students across the world. And so it's, at the heart of it, it's decentralized learning. So I guess without going into too much of the nitty-gritty details, because I could talk for hours and hours, is there any like huge major questions that you guys have? Yeah.
And I'm sorry if I missed this, but what's the incentive for the individual proposing to follow through and complete?
So basically, it's their track record or it is their, if they're submitting it like under their name, it's their, meaning that if they don't follow through, there's a very high likelihood that they won't get funded for next time. And so the point is that we can't guarantee that, right? That's an issue. We can't guarantee that 100% of the students will follow through on what they promised. But what we can do is over time, we can reward the people who do follow through and encourage the people to, and also, it's about limiting our risk too. So if a student has done X number of events and they've submitted X number of projects and they have attended or hosted a certain number of workshops, we can make an analysis of the work that they've done in the past and make a prediction on what they might complete. And another way of doing that, I guess, more concretely is by making it so that the funds that we give out, it's not just a one and done, good luck, I hope that you follow through or you accomplish your goal. We actually break it up into different milestones, and so we require different deliverables over time so that it's essentially we are limiting our risk in that student not being able to follow through, provided with the incentives of encouraging them to follow through. So there is no simple answer to that question, and I guess the answer is refinement and efficiency over time. Yeah.
Since you're using the technology, why not a coin reward system?
Yep, and so we've been thinking about that. So he's been talking about kind of like a coin reward system, or like maybe a referral system in. And exactly, and so that is going to be one of the things that we move into is now that it spreads like wildfire. Like the idea itself, when students learn about that, they want to get involved, and so we are researching ways to, I guess, kind of incentivize the. I guess the sharing of it, or to get people involved, or maybe somebody's submitting their first project or something. Maybe they do get a little bonus or something. But the point is that we don't even really need that because there is so much interest, and it is like blockchain is the word on on campuses across the United States, and so by combining this movement with students' ability to kind of learn and take their own education into their own hands, it's a really good parallel because the two kind of complement each other. So that's kind of our angle. Yeah.
So I'm curious about the barometer or flavor of young students today for the desire to be entrepreneurial and profitable in spirit. Mm-hmm. So can you give me a little bit of feeling of what's going on in your youth right now?
Yeah. Unfortunately, I have to say I feel bad for the students who don't have that mentality, just because I see a future in which we will be receiving opportunities and jobs based on our track record, based on our history, based on our projects, based on our impacts that we've had on the people around us. It's moving, and I know nobody likes to hear it, but it's moving less and less away from a piece of paper that says you're the standard of everybody else at this university. And I know nobody likes to hear that, but the point is that now we have something like cryptocurrency or blockchain that can cryptographically prove track records. And so by enabling students to get an early start in that, by enabling them to build up their portfolio of experiences, their portfolio of opportunities, projects, things that they've created, they can use that as essentially their own personalized, resume, and they can get paid to build it up over time too. So it's making your education your occupation, because I also don't think that anybody should stop learning at any point either. And so by combining the application of knowledge plus the incentivization to obtain knowledge, it creates this kind of perfect synergy that I guess can only be explained by the effects that they have. Like, I can't even put that into words, but again, it's like this learning movement that is combined with a technology that can now make it happen and make it a reality.
There's room for them to be helped in understanding what investing in their own life and in their own. So you're telling me they're stunted. A lot of the young people today might be stunted, perhaps, and there's opportunities for maybe people that like us that are entrepreneurial to help young people start to get a better understanding for if you invest in your technology. Yourself. Would you say that that is true?
Exactly. So by essentially investing in what we are doing, we're telling students you are investing in yourself, because. And actually, that is our model. If the student can prove that they're growing, they're learning over time, they're delivering, if they're investing in themselves, we want to reward that. And so, to answer your question about, well, not everyone's an entrepreneur. No, right now everyone is not. But I personally feel that that mentality or that way of thinking about, about creating something, about going out there and doing something that nobody asked you to do, that is where the world is moving. With technology, with globalization, we're only going to see this increase even more and more. And so this is a way to not only teach people that this is a really powerful concept, that their own education, their own development is for their own benefit too, but it's also to show them that it's really good for a lot of other people. They can see the effects that it's having on students, on the problems that are being solved, the things that are being made happen, the donations that are being made to communities that are being that are funding research. So they will be able to see it. There is no way that I can, sit someone down and say, you need to become an entrepreneur, or you need to go out and create something or do something. No, I'm going to prove it to them. We're going to prove it to them by creating a platform that shows them thousands or millions of other students doing that. And so it's that proof of work model applied, or proof of exactly. It's a proof of knowledge and education model combined with proof of work, or their ability to follow through and produce something, create something tangible that can inspire other people. And the other part of this is not something that will be for profit either. I know you're thinking, well, how are you able to scale? How can you build something that's renewable if it's not going to be on a for-profit model? Well, the point is that we're going to essentially encourage students to help and teach others, be rewarded by that, and then basically offer that as that's their incentive. That's what we want their incentive to be. It shouldn't, right now, it's, yes, I can get a scholarship for $1,000 per month, but in the future, we want to slowly over time teach the students that their incentive should be, their own growth, their own development, and their own ability to help others around them. Yeah, Philip.
What can I buy with Dash?
All right, yeah, so sorry, I kind of went off on a tangent. So with Dash, and if you go to discoverdash.com, you can see thousands of merchants and stores across the U.S. that are accepting it. And again, the point is that it works really, really well. And there are a lot of I can't talk about all of them, but there are a lot of integrations that people don't even know are happening, behind the scenes. Integrations with payment processors, existing payment infrastructure that they are doing, that I think people will kind of wake up over time and realize this is a thing now. And so it's their model for essentially their marketing is develop it, create the features, create the community, make it work, and it will market itself, essentially. And so you see that they don't do these, they don't hype a lot. They don't, we actually, we sponsored the BTC Miami conference. And so one thing that I noticed was just all across the board, all of these, I call them hype tants, are like, just people trying to, I don't know, like reinvent, I don't know, the next wheel or something. And the more and more I realize, why do that when you have something that is working and that you can create something called DAPIs, or decentralized APIs. So it's a little bit different than dApps. So that's just decentralized apps. And so you see that used a lot with Ethereum. But what essentially Dash is doing, it's that combination of a scalable model that's working, plus they're going to offer decentralized, instead of apps, decentralized APIs or interfaces, so that it can use the existing infrastructure that Dash has created through this two-tier network, so that you can have a DAPI on the network that you don't have to wait, minutes and minutes, or potentially hours for confirmation times. So that's kind of my personal thinking on why it has a lot of potential to do really well. And at the end of the day, it's almost like, are we expecting all of these merchants or all these online stores to accept like 60 different cryptocurrencies, or I don't know. So we're kind of bit to byte, or what we are doing, we kind of took that approach. And if we create something that is working for students, and it is helping students share ideas and develop solutions to problems, that's all the the marketing that we need. We don't need to reinvent the next the next like coin or anything. We can create our platform around the existing infrastructure. Yeah. So that's a little bit about what I'm doing, and I guess one more thing I want to say is this all kind of started with, again, like this it's been this like progressional thing for me. And so as we increased our funding, the more and more I realized the funding that we received, this was bigger than any one individual or even just our idea. Meaning that I wanted to make what we were doing so much more impactful and scalable and affect so many more students. And so I spent like 2 or 3 months just working with my team. I'm actually at Iowa State University, and we just prototyped and developed all of these essentially this entire model. And so now we're at a point in which we want to get help. So we want to involve students, we want to involve professionals, and we want to encourage them to submit proposals for projects, for funding, for all of that. So anyway, our next kind of phases or steps is going to be essentially building up that track record. So building up that track record of things that we funded, student projects and all of that, and so that we can use that as our example or as our, as our history. And then that in return opens up new possibilities, because now a student can look back and they can see what we've done, or a donor or a company can look back and they can see it, all of the impacts that we've had, and that's their incentive for helping us. All right. Thank you.
Thanks, August. And we'll have plenty of time afterwards. We don't get kicked out of this room. So if you want to talk to August, ask some more questions. We just want to get to the next speaker as well. So what's interesting about what August just went through is what's called a use case. Okay. All of the things that we do with crypto is everybody's trying to figure out what to do with the blockchain technology. So we're talking about education. Wow, fantastic. Government, voting, financial institutions. So these are use cases. I don't know if anybody's heard of CryptoKitties. It's a technology that's being built on the Ethereum blockchain, but it's a use case. They're mating cats electronically. So it's very odd, but that's a use case. You could see that's a first initial stage of it, but now we have more sophisticated, and we're growing in this very, very interesting and small technology, or great technology. Jason, where'd you go? Oh, there you go. All right, so Jason Jenkins is going to talk. I mean, everyone's talking about trading, coin for coin, this for that. Jason and his partners are creating a trading platform. I'll let him speak for himself, but very intriguing, but very, very, very much enjoyed talking to him in the last couple of weeks.
Yeah.
You're right. Is that right? Oh, go ahead.
Yeah,
Hook up to that too.
here.
Yeah, I'll help you out. You got it?
I'm good to knock this off at least one time today.
That's all right. We'll pick it up. Any questions so far while we're waiting? All right. Not a very active crowd. You guys got to...
When is the next meetup?
So, that's a good point too. Except for this, we landed on Valentine's Day, and it was the day before FinTech, so we didn't do it, but it's the second Wednesday of every month. We've got this place booked until November. I'm going to tell them if things keep on going at this rate, we'll book it for another year. Good partnership with the Park District. Also, afterwards, we'll stick here for a little while. We do go out for drinks afterwards at Steak and Vine. Everyone's welcome. We'll go there, have a few drinks. No obligation, but feel comfortable. Ask questions. Please finish off the pizza. And ask me afterwards if there's anything that we missed, or if I went too fast or too slow through those slides. If there's something else that you want as part of this meetup, this is your meetup. Let me know, because I wanna make sure everyone's satisfied with their experience. Thanks to Mr. Kavanaugh here, the answer is yes. So if you guys don't want to be on video at any time, let me know that too, and we'll delete you. Matt is a wonderful, wonderful editor. So, you all ready? Yeah. Oh, you even got your power. All right, Jason, thank you.
All right. Thanks, Phil. How's this sound, all right? Perfect. Good? Okay. Yeah, that was a great presentation. I have 8-year-old and 11-year-old. I'll tell you, if I was younger, I'd be all over that. I mean, that's a great example of what the blockchain, digital ledger technologies are doing, is just disrupting pretty much every industry in a way that, I mean, it's just the speed at which blockchain is just changing entire old systems with the educational system. We talk a lot about trading. Obviously, the whole financial system is just getting turned upside down right now. But anyway, in my background, I actually flew in from Florida. I'm from Colorado originally, and I'm here with Ritas, my partner, and I started Jenkins Risk Management. I'll get in my background here in a little bit, but I was a bond trader, and I traded on the institutional side. Actually started in the business at Charles Schwab. I traded equities and options, and then a lot of 30-year guys that used to trade in the pit down at the board made the transition to the screens, and so I ended up running a couple rates desks. I learned from them for 10 years trading down out of Boca, West Palm, and now we're in Jupiter. But so the long story of that is we got into the trading digital assets and the cryptocurrency business largely because we started building and educating Forex traders in addition to just the fixed income market. So my background was, I mean, I traded with all the primary dealers, a lot of hedge funds, and we had a very good directional model that we would teach guys. So whether they're prop traders at DRW, longer term guys that were interested in trading the yield curve, for 50 basis points, longer term guys, they would use our model. And I wanted to get into some concepts because I know there's a lot of people interested in trading, and so I thought I could share a couple things that we do. But we're big into cycles, and so anyway, we can get into some of that. But what we saw and what we're currently building is we're building a digital asset management firm called Block Edge Capital. And in addition to that, we're also building a rhythm trading platform that I'll talk a little bit later about. And the idea of where that came from was as you get into this space, the learning curve alone is hard enough, trying to understand, what is a blockchain, or what's Hashgraph, or what's a digital ledger technology, and then what's a wallet, and how do I start trading? If I want to buy Bitcoin, how do I start? And so as the community, as this industry develops, there's a need for making it simple, getting the masses involved in an easier, simpler way. And so I'll just share a little bit about my background and how we started trading, and just to give you a feel for how disjointed the whole process is. Just to show of hands, how many people have actually traded on any of these exchanges? Okay, so plenty. So if you're like me and you have an authenticator in your on your phone with 15 different logins for all these different exchanges, and so the big problem right now is if you want to get dollars into the system, you go through Coinbase, maybe you go through Gemini. And as you get dollars into the system, that's okay. But the next step is, well, for those of you that don't know, Coinbase is probably one of the leaders as far as an exchange that basically serves the U.S. People all over the world, but very big on the U.S. side. And so you tie that into your debit card, credit card, whatever, and you can get dollars into the system. But you can only buy Ethereum, you can only buy Bitcoin, you can only buy Bitcoin Cash, right. So, what happens is as you start to trade and you see these other opportunities that exist, and Neo and the different altcoins as you start to learn about them. Well, some of them only trade on Binance, which is out of the East. Bittrex is another one we trade out of a lot. They're out of Seattle. But what you end up doing is you're constantly trading these coins, but the big problem is you don't want to leave them on the actual exchange. So if you make a purchase and you decide you want to go long Litecoin, well, whatever the amount you actually buy and purchase, you don't want to leave it on the exchange because that's where all the risk is from a hacking perspective. So the blockchain hasn't been hacked. It's what's been happening on top of these third-party custodial-based models. All right, so it's very disjointed. And Rhythm is aimed at solving a lot of that. I'll kind of touch on that in a little bit. Phil touched on security. How many people own what's called a Ledger Nano? Good amount. Okay, that's good. I mean, we were just in Toronto, and the head security guy at Shapeshift was there, and he's the security measures that those guys have. They're not allowed to use their name. None of them have an email. But there's certain security protocols that you really want to focus on in this space because, I mean, as a trader, whether you're trading with Thinkorswim or you're trading on an institutional level, I mean, everything is designed with a big wall around it. So all these institutions have this centralized, and for good reason, for security. But when you get into crypto, it's about you're in charge of your own private keys. Anyone gets access to those keys, I mean, your funds are instantly gone. You never get it back. You can't track it. So just understanding, this is some of the educational stuff that we do, but getting a ledger, this yellow thing here is a YubiKey, and you can actually plug that in on a keychain into your computer so that it's just another level of security. But a ledger, this is really good for, it's one thing to have a wallet on your laptop, but if your internet connection is compromised, you get into your computer, there's still ways that the hackers can get in and get that. So the safest thing is to get your coin on something that's offline and then store it there. They call that cold storage. Yeah. But that's really important. What we kind of want to do with Rhythm is that, again, it's a constant process of moving it on the exchange, taking it off, plugging in the USB, taking it back out. And where the industry really is moving to and needs to go is where if I'm in a community and someone like myself or someone sends out a newsletter like, hey, we really like Neo down here at this price level, we're issuing a buy recommendation. Well, instead of me having to go log into Bittrex or Binance or all these different accounts, do the trade, get the coin, send the coin back to my computer, back to my wallet. We want to create a process where it's just one-stop, easy, smooth process we call build your own wallet. So where we can actually send out a buy recommendation, and you can say yes, we want to participate. You can actually set up via the Ethereum blockchain that, hey, on these smart contracts, I only want to trade 5 Ether for every one of your guys' recommendations. Okay, the blockchain, the smart contract knows I can only trade this recommendation up to 5 Ether. Do you want to participate? Yes or no? Yes, you swipe right. And then we go in and do the trade, the swap on the Ethereum blockchain, and then we actually send it right back into your wallet at your address. Yeah?
Isn't that like pretty similar to what Coinbase GDAX are doing anyways? Because Coinbase being the wallet and GDAX the trading platform. So you can instantly go back and forth.
But the thing is, it doesn't actually go right from trade right back into your own wallet.
Well,
Right.
Coinbase being your wallet.
Okay.
Because it is, and it's the IC as well, I understand. The USD part of it.
Okay, yeah, yes and no. So So Coinbase is what we call, it's a web wallet. So in theory, yes, they're insured, but if Coinbase were to be hacked and your coin is sitting with base, then essentially you're at risk of losing that coin. So really the safest way is to have it go from trade, not to a third-party custodian, because we've kind of taken blockchain, which started as decentralized, and then moving it back into the centralized world, which is natural. But it should be, hey, if we can trade via atomic swap, that's where the industry is going, where the blockchain takes care of the clearing, it takes care of that extra step, it removes the custodian. And so that's the safest way. Do the trade, and then right back into your wallet. Yeah.
You're still going to have the timing that you have to solve.
Well, you can
You're still going to have that.
you can swap on the blockchain. If you're familiar with the atomic swaps that are coming, you can actually instantaneously, the blockchain knows, all right, you have X amount of funds. I only swap that trade with you right as it occurs, kind of in real time. That's a good question, though. Yeah.
This may be inappropriate or too soon. Is there any mutual funds or funds where, I mean, for me, to be able to study which
Yeah.
cryptocurrency to get involved in might be too much for my brain.
Right.
So is there anything like what they have like a mutual?
That's a good point. That's kind of.
Repeat the question for everyone, though, too.
Yeah, he was asking if there was any other ways or mutual funds, kind of more of a passive approach to investing, if I understood you correctly. Okay. So what we've actually done is we realized the need for, okay, there's some people that just want to say, hey, I just have some capital I want to invest, but I don't want to learn about a wallet and I don't want to learn about the technology, and can somebody handle that for me? And so at Blockhedge, we're actually going to have funds that we issue that are just like that. So if you have a large cap fund that you want to invest in traditional financial services, that's fine. And on the Rhythm side is more like if you want to be an active trader and you're really concerned about, hey, I want to keep my own private assets, that's what the Bring Your Own Wallet is. That's a technology we're building on that side. Yeah.
Can you actually, like, with these blockchains to actually issue options and kind of future work with futures and et cetera, except that instead of going through like an institution like CME, ICE, et cetera, you would actually be able to do it yourself and maybe have the blockchain feed the market data that's actually occurring on real time, or am I wrong on this? Yeah.
So I think if I understand it, so the question is, can we take the same concepts with options and futures and put it on the blockchain?
Well, actually, issue like Ethereum blockchain, like using it as an option contract or a futures contract, and you know, when you're trading is, you know, you're trading the right to or responsibility to like buy oil or to buy something at some time in the future.
Okay, yeah. So you mentioned IOTA. So what we do, we have a community of traders right now, and everyone's very interested in doing the same thing. They find this project that they're excited about or this coin. And as we speculate or people want to invest in those projects, I think you will start to see the derivatives market grow around each token or each cryptocurrency, just the same way you have options on stocks. I think it's going to take a while, obviously, but there are some firms already, called Ledger X is one, where you can trade options on the majors, so Bitcoin, Ethereum, Litecoin. But they are really targeting the institutional, bigger money players right now. I think you have to have 5 million if you even want to play, or you have to trade minimum lots of like 100,000 contracts. But that's definitely where the industry is moving to. We were in Toronto, and at Bitcoin conference, there's a group called Polymath, and they're trying to take some of that same thing that they're doing is trying to take different securities in the industry and move it into the digital world.
I think basically I wasn't actually asking to provide Bitcoin or anything. What I was actually saying is that using the Ethereum blockchain or something to provide services and et cetera, like a futures contracts or some option contract, giving the user the right to have some option to buy or sell something sometime in the future. But the whole thing, the whole communication is in the blockchain ledger
Mm-hmm.
rather than in like in some sort of centralized clearing firm.
Yeah, I think you will see that. You're starting to see. We talk about disruption. the blockchain is definitely going to disrupt the clearing firms. I mean, the amount of money that's probably between 60 to 80 billion a year just in clearing. I mean, when I traded over on the institutional side, when we wanted to execute a bond, I would send a Bloomberg email. You know, I put out a chart. They say, hey, we really like 10s down here. I send you a Bloomberg email message. You have to say, yeah, okay, Jason, buy me some 10s if we get down to that level. Put it on the screens, execute on it. Then I have to, you know, yell to the guy in the back, sits behind me, to say, hey, is the trade checked out? He has to call the back office over at whoever I traded with. They have to agree, and then it has to settle 3 days later. So all that's going to change, where that can be done in a trustless environment on the blockchain, basically instantly. And that's something else that, man, I remember we traded the flash crash. That was like 2012. Knight Capital is a big firm over on the NASDAQ. They lost probably 400 million, I think, in one day, because their software algorithm program was literally just buying up 150 different companies all at once, just for 30 minutes. And those types of glitches, we can solve that when it starts to move on to the blockchain, because the system won't allow that transaction until it knows, okay, there's this capital here, or yes, this is, you could set parameters where I want to trade within our market making software. If we're trading Google, if we're trading Nvidia, whatever it is, we only have 30 million that we're allocating to that stock. And the blockchain will make sure that, you know, I don't need to trust that the other person has the funds. I don't need to trust that the system is going to do what it says it's supposed to do. The blockchain is going to be very good about just saying, nope, either this contract is or isn't valid right from the get-go. And that's something they call, our Ethereum developers are really good with the terms, but it's trustlessness. So we used to have trustees. Now it's all moving towards this idea that I don't really need to know who you are. I can trust the actual technology to make sure that, you know, that's indeed the case, whatever it is we want to swap on. We get a lot of questions on this. Some people think it's interesting. I was definitely not one of the first kind of guys in, obviously. There's a lot of, you know, a lot of people in the business that were in at stupid prices and made a lot of money. But I think I was probably one of the first to kind of jump the old Wall Street ship and kind of move into what now is a big wave of institutional money getting into the business. And we just get a lot of questions all the time, like, is Bitcoin in a bubble? And to me, it's just kind of probably the wrong question to ask. Most of the time, people just want to know, should I buy or should I sell? If Bitcoin was up at 18, 19,000 and it goes vertical and it's overbought for a lot of different reasons, telling somebody that it's going to be worth 300,000 on valuation isn't really helpful. But down at 6,000, 7,000, you can still make the same valuation case. But the point being is that the big institutional money hasn't got into the space yet, so there's probably plenty of room to run. I still have colleagues calling all the time, really smart traders, mortgage traders, swaps guys, CBO guys. They're like, I just don't understand this blockchain thing. I can't get my head around it. So I mean, our take and our view, and this is why we started our digital asset management firm, was, I mean, I literally couldn't find any companies on Bloomberg that had anything to do with crypto. This was literally just 9 months ago. And now maybe there's a couple, maybe there's 100. And so when this wave of institutional money comes in, it's going to take a while because the pension funds, there's a lot of rules around what they can and can't invest in. And they all want to get involved in the space, but the compliance person that are sitting there saying, well, you got to tell us what we can and can't do, because until we do get some regulation, it's just going to take a while. So anyway, that's where I think we are there.
Not gonna tell us where we are in that chart, my friend?
Well, I'll tell you, I think so we're definitely in the institutional phase. I mean, I've had some Uber drivers talking about mining Bitcoin, and that was probably yeah.
60% of like everyone in high school now is involved.
60%? Yeah.
What's like would you say the percentage of like high school kids interested or invested in cryptocurrency?
I don't know if it'd be 60%, but I definitely know that there's some kids that are really into it and some kids that don't know what it is
Yeah.
at all.
Really?
But I mean, me and Jack have a lot of friends that I don't know. You wouldn't think of a high school student investing in much at all.
Yeah.
The amount of interest around cryptocurrency is really high.
Well,
in
sure.
high schoolers, which is surprising.
Well, and the younger generation gets it for sure. You know, I mean, and that's what's encouraging about the regulatory environment too. I mean, there's a lot of people in the old models, a lot of the establishment that doesn't want to see this industry disrupt finance and everything else. But as the younger generation comes through, that they'll be much more interested in making sure the right regulations there, et cetera. Yeah.
Yeah, I've got not a lot of cryptocurrency, but there's two different exchanges, and how do you know there's a $500 swing between each of them?
Oh.
Which
I
one
know.
is like what?
Well, we actually do a little bit of, they call that arbitrage trading, and it's incredible. I've traded, there's a couple good exchanges that I like. I don't have them up, but when you want to bring money into the market, in other words, when you want to take dollars and make your first buy, Coinbase is good, Gemini is good, GDAX. And typically what you'll find in those exchanges is the price is a little bit higher because there's a premium that they charge, but getting dollars into is such a challenge that those bids will be a little bit higher. But then it's just very geographic. So for example, in Zimbabwe, I've bought Bitcoin, just name the price, say it was at 5,000, and it's trading at 10,000 on the Zimbabwe exchange because to them, their currency is absolutely on fire.
If it's the same coin, why would there be such a difference in price?
Well, that's a good question. So a lot of it has to do with getting the dollars back out too. So you can buy Bitcoin, say at 5,000, and move the coin almost instantly. Maybe pay whatever the exchange rate is at the time, $5-10, and then sell into that exchange. But getting dollars out of that exchange is almost impossible as a U.S. citizen. But those spreads do exist. I mean, you could find 5%, 10% between the bid ask, and you could move and sell into a Russian exchange. I've done that before. Yeah.
It's like a whole movement there.
Yeah.
Lines outside the ATMs to get access to crypto.
Yeah. Yeah. So I was saying that the Eastern exchanges, the demand is so much higher. I mean, the East is actually much further along than we are. I mean, I have hedge fund guys that were in Hong Kong, and they've bought houses with Bitcoin. This was years ago. They were buying cars with Bitcoin. And so the West, we're a little bit behind. But to answer the question, the arbitrage is a lot of discrepancies between the exchanges because of inefficiencies in the technology. But a lot of it is trying to get the money back out is a problem. So those spreads would narrow as the market develops. But if you can't get dollars out of the Zimbabwe exchange unless you actually live there to transfer the dollars out by their rules, that's going to naturally push the price up just based on their currency being as weak as it is. Yeah. Go ahead.
Yeah, I was just saying that there's also the potential for you to actually use it if Bitcoin or some sort of cryptocurrency comes in, as long as it's decentralized, there is a possibility that these cryptocurrencies might become actual real currencies if you can create fast transactions.
Sure. Oh, you look at what's happened in Venezuela. I mean, people's whole lives have changed because they couldn't feed their families. They're starving. They can't use this current system. The Venezuelan peso is just absolutely losing all kinds of value. And there's people that got into just mining a little bit of Bitcoin on their laptop, and I mean, totally changed their life. And there's stories like that that are pretty incredible. It speaks a lot for the space. I just wanted to share with you guys a couple trading concepts too that our traders like. I think I do. Yeah, there we go. So I said, you know, when we were trading fixed income, and I think what I kind of call old Wall Street was really all about valuation. And then, geez, when futures started at the board down here in the 80s, not a lot of people were even doing charts back then. One of the traders that taught me, I mean, he used to stand up on the top of the pit and literally point and figure and draw out the charts. And he sold a lot. He made good money as a technician. He sold his services. Well, now everybody is pretty much a self-declared technician, and everybody understands trend lines and how to read price and charts and everything else, which is good. But I think there's a lot of this idea of time. There's one thing to analyze price, there's another thing to understand time and cycles. And so there's not a lot of people that have done work on the cyclical side, and that's what we've kind of really done a pretty good job of. And I know you guys can't see that, but the main points of our model is that we kind of drew a lot of parallels to physics, just the way energy flows. If you think about a market, yes, there's a lot of emotion, and there's a lot of psychology to markets, things like reflexivity and all the the greed and fear, everything that you've heard about, and sentiment. But it's also energy moving through a same medium, just like energy moves through water, just like there's a wave formation that moves from the sun, from light. It's just how energy travels. And so those same patterns and those same wave formation vibration shows up in markets. And so this is our whole trading model that I go through with our traders. It's 9 hours. We sell a course on it, but I just wanted to give you guys a couple, just add some value you could take home. So as we study these concepts of waves and frequencies, does this pop it all the way out? What do you guys think right there? Is that right? Okay. Well, this is cool if you want some history of markets. So the global business cycle is actually on an 8.6-year frequency. And so there's lots of different cycles. There's all the wave formations, nothing's the same. Obviously, if things topped out and bottomed with an 8.6 frequency, the market would never go higher. But the point is that these are turning points. And a derivative of 8.6 years is actually pi. And so pi is the perfect circle. It's the perfect cycle. And when you start to kind of look at that in the context of markets, there's a lot of amazing things that start to happen. I'll show you guys what we call a pi line concept, something I discovered. It's very simple, but it works again and again and again in markets because it's not just averaging out price. It's taking in the concept that, hey, there's 314 units of time that's going on here, so that creates a rhythm. And so this was actually discovered by a gentleman named Martin Armstrong, and he studied the panics of all the past financial panics. And there was, I think, 224, and he realized that of those 224, they tend to happen about every 8.6 years. And so he came across this discovery based on just basically all the different financial panics. And so when we look at the history of the business cycle, you just want to go right. Can't quite see it here. Do you know how I zoom that out? There's that right there. What ends up happening is there's smaller waves built into bigger waves, and there's always this shift between private confidence and public confidence, and it's a constant battle. And so the Roaring 20s was when we had a big private wave that peaked. That's the Great Gatsby's and everything that went on with the automobile. 1981 was actually the peak in interest rates. That's when, I mean, there was a lot of money being made down there in the pits when you could, a round turn on 10-year futures contract, I think was $60 a contract. But the peak in rates on that wave, which was a public wave, the public sector bond markets, was in 1981, and now we're currently in a private wave. And I actually think this wave, you're going to see cryptocurrencies, you're going to see everything that the blockchain is doing, which is taking market share away from these central governments and central banks. That's a part of this shift back to private assets. And I think it's going to be a big part of this next wave, especially if we run into the same things we had in 2011 with Greece and the sovereign debt cycle. That's still, I mean, Greece was just the tip of the iceberg. So the more these governments go broke, the more the bond market really starts to struggle with finding buyers when they actually rates do rise and the deficits blow out. There's a real risk that these governments that are broke are going to have a hard time selling their bonds. You're going to see the market back away from those types of investments and the currencies that are backed by those assets. And so you can expect to see Bitcoin and these other currencies that are on the private side, I think, capture a big shift of that. Yeah, you can go to the right. Oh, you wouldn't do it for some reason. I'm not sure. So that's right there. He was just, you can keep going forward. That's 224 years. But you'll find out that 8.6 is a derivative of pi. So if you take the number of days in the 8.6 year cycle, it's like 3,146 days. So pi times 1,000. And you guys can it's hard to see this, but if you scroll up, just move it up a little bit. Yeah, so this is that 8.6 wave and what it looks like. So what's important to understand that these are turning points in time. So it doesn't necessarily mean that a market bottoms with the bottom of the cycle. You could have a cycle inversion where a market will top with this turning point. And a lot of times that'll happen. So these are the major turning points. These are the two minor turning points. But it's just amazing that you've gone back. I did this on Bloomberg, really studying this stuff for years and years. But the precise low in the equity markets was April 1994. You had the Asian currency crisis, 97, happen on this turning point here. Exact height of the Dow, I'll show you some examples on the price chart, was 1998. And sometimes these turning points happen to the exact day, which is just unbelievable. It really shows you that there's a hidden order of time and cycles when you really start to study this stuff. Sometimes it's to the month. But on this side of this wave was long-term capital management. That was a disaster. You had the monthly low in gold. It was a 19-year bear market. Ended right there on that minor wave, dot-com bubble, basically to the precise month on that turn. And then stocks bottom with the low of the cycle in 2002. And everything's connected, too, when you talk global macro or markets in general. So when you look at the dollar is world's reserve currency, so a lot of assets are priced in dollars. So when you get a major low in the dollar, you're going to have also oftentimes a major turn in other markets. We all pretty much are familiar with 2007. The Dow Jones Industrial Real Estate Index peaked to the exact month there. Banking crisis was on the right side of this collapse of confidence. And then commodities peaked. If you look at the CRB index, if you look at gold, peaked to the exact, that was to the exact quarter, but right into 2011. You can go to the next one. Yeah, so that's the Dow Jones real estate, peaked to the exact month with the business cycle. And then what's interesting too is that actually the bottom to the exact month was on the low of this turning point in April of 2009. So this is just showing that these cycles do exist on a macro level, and then we get it down to even on the 1 minute, 5 minute, 15-minute chart. I teach my traders this all the time. I mean, we work our risk around the price, but then we're very cognizant of the 15-minute cycle, the 30-minute cycle. Yeah, you can keep going down. Are you going up now? Keep going. I'll just show one more example. This was 1929. So I dug this out of Bloomberg. This is pretty amazing. So here we have the bottom of the cycle. The Dow broke out. Can't really see that year. That's got to be 25. And then goes on a nice bull run, peaks basically to the exact month with the ECM, collapses, based here in 1934, had another run about halfway. I teach my traders this concept we call a wall. So if you draw that high to the low and you think of that as one candle, these are called trading candles. About halfway is a good spot where, or a 50% retrace, where you would see a market struggle. So when you kind of know some of those concepts and you line it up with the turn on the cycle, you understand cycles, you can, some of this stuff really starts to stick out. So the low there was April 1937. Dow basically bottoms here 1942, a little after the turn. But you can see here how, bottom here, you cycled all the way to this turn. This was a low here. 4 years later, you basically ran out of steam again on the cycle high. The Dow broke this high right on the cycle low and then actually screamed in the 80s or into the 50s into that next cycle. Anyway, some people find that interesting. I like the history of the markets in general. I'll just touch one more thing if you guys find this interesting. This pie line concept that we use, a lot of people in the community like. Yeah, that's good. You can go down a little bit.
Can we go through that math one more time on the highs and lows, where they are in the cycles? Was it every 4 years? 8.6.
It's 8.6 trough to trough, or peak, or trough to trough, or peak to peak. So 4 years down, right? 4 years up. Yep. And on this last peak was really interesting because this is a global business cycle. And so what tends to happen is the capital will concentrate in one area of the world first, and then oftentimes inside of one particular asset class and or sector. So when real estate peaked, that was a global phenomenon where capital was moving into the US, then inside of the real estate market, and then specifically in the US sector. And so for it to really be a real bull market, you need world capital flows moving into that asset class. And you can kind of see that by looking at what assets rise relative to the currency. If you have something rising in just Argentine pesos, but none of the other currencies, if you price gold and euros or gold in the Swissy, and gold isn't going up on those charts, you know that that's not a real global bull market. So what we tend to try to keep an eye on is, well, what peaked on this last peak in 2015? And again, it's the economic confidence model. The peak in confidence was actually in government. So we've had this big collapse in government confidence. You can see that with the populist movements, the separatist movements. You can see it in some of the sovereign yield prices that have been rising. Brexit, on and on and on. There's this cycle now that's a collapse in the confidence. So what we try to look at to the day of the peak in 2015 was actually the day that Russia first started bombing Syria too. So when we pay attention to those events and realize, okay, that's probably going to be the focus, at least for the next 1 or 2 cycles. So we actually didn't really see a particular market really change direction with this last big major wave, but that was a big change in confidence, which has kind of been dominating this last move down.
2019 is going to be at the bottom of the nadir then?
So the next bottom of the ECM, the question was, yeah, what's the next, is 2020. I have the dates exactly. Yeah. Well, this is just a real interesting fact. This just shows you the underlying design of the universe is 8.6 years. Perfect number of pi times 1,000 days. All right. Another derivative, 8.6 times 3 is 25.8. Well, the precession of the equinox, 25,800 days. So the amount of time it takes for that whole rotation, very cyclical. Yeah, so I'll just show you guys the pi line. Yeah, sorry, go ahead. Oh, right here. Okay, so so when we look at waves within the market, a lot of these sine and cosine curves are formed by functions of pi also. So there's more than just the geometry. There's more here going on, not just math and what we learn in school. There's also a geometry of time, really. Keep going down. So I just wanted to show you guys this pi line concept. It's yeah, you're okay. Well, here, how about this? You can just exit out of that, and I'll just bring up one chart. So if you look at the price of Bitcoin, actually, Bitcoin on this last move down bottomed exactly at what we call our pi line. And you can do BTC pi at the very top there. So I can tell you in my experience, like, there's no traders on Wall Street that have a moving average out past 200. So this isn't like a self-fulfilling prophecy where everybody knows this pi line. This is just a simple discovery that I came up with. And you might have a trader out to 300 period moving average, but pretty much everyone uses a 200 period moving average. And so I said, well, maybe something out a little bit longer, but played around with this idea. Okay, what if we do 314 period moving average? And the markets tend to cycle away from this average back to it. And the amount of times it happens is just amazing. I mean, it still amazes to me how it does it on the 1 minute chart, it do it on the 5 minute chart. So this is a really helpful thing. You guys can take this in tomorrow into your trading, put on there a 314 period moving average. And again, the reason why it works so well is not because it's just a stupid line on the chart with an average. I mean, we don't trade that way. I mean, there's some people that do, like, hey, we're above the 50-day, we're bullish, or now you're 2 ticks below it, we're bearish. I mean, these are areas. How you trade around those averages is, there's a lot more to it. But the point that this line is picking up is that it's measuring a cyclical amount of time. And so markets it can only stretch so far away before that energy wants to come back the other way. And so we use this a lot in our model. You can see it on Ethereum on a 4-hour chart. I just brought this up today. Yeah. And so the next question that you got to kind of do is, well, how are you going to structure a trade around that average? But this is a 4-hour chart of Ethereum. And I know it's really hard to see on the black here on these charts, but this was the low. This was the low in December on Ethereum. Basically tagged it exactly intraday and then rallied. And what tends to happen is we have something we call exponential moving average bands. And I like it because it shows a good visual for traders of the wave formation. So can you guys see this at all? They're different layered lines, but you could put a 50-day moving average on here. You could put a 30-period moving average on here. But the point is that when you're trying to study trend, I call it technical market structure. You're trying to identify, hey, is this market making higher highs and higher lows, or is it making lower highs and lower lows? And so the best way to understand that is when you're in an uptrend, you tend to get higher lows that define the trend at or near these bands here. And when you break that, you tend to get the deeper pullback. So it's like 75 to 85% of the time. When you break the bands in an uptrend, you're going to get the deeper pullback either to the 200 or it cycles all the way back to pi. And it's just this same pattern plays out over and over and over in different time frames. Here you base, you break out, you make a higher low at the bands, higher low at the bands, can't hold the bands, you break this TMS, what we call this, you get the move back to pi. And it's kind of the same cyclical stuff that kind of happens over and over. And so we structure our trading and our risk around these different levels. So you kind of have a way to manage your risk. You know if you break the bands on Bitcoin, hey, there's a chance we might go all the way back to pi. We broke the bands at 12,000. So you had another 50% retrace all the way from there. Anyway, something to share with everybody. If, you know, it can help make you some money, save you some money. But there's a lot of concepts you can do along that. Lastly, I just wanted to touch on what we're doing at Rhythm. You could do, yeah. So this kind of gets into a lot of the deeper aspects of institutional stuff that we're doing. So we're currently in the process of doing a pre-ICO, and so Block Edge Capital is our company that we're going to be, you know, similar to a mutual fund where we'll be trading assets for people on that side, the passive investing side. But then for those individuals, like right now, we have a community of probably 500 traders just interested in crypto. And they're chatting in there. We put out buy and sell signals. We work on things like risk management, options, futures around all this whole space. But for that community that's really interested in, hey, I want to trade my coin and then I want it back into my wallet. I want some help with, we plan to have a media channel within our whole Rhythm platform. And so we're currently doing, we're in the pre-ICO stages right now. We may or may not have to do the ICO in the spring. Go down a little bit. Yeah, I touched on a lot of this. Like, this is probably a good point if you got any other questions anybody has. Yeah.
I was just kind of confused on what the definition of derivative meant, like in the context of the economic confidence model.
Okay, so a derivative is just yeah. Mm-hmm. Yes, a derivative is just derived from something. So an option contract on a stock, it's a derivative of how you want to play that from an option standpoint. What I think I was explaining was those numbers. 8.6 pi is a derivative of 8.6. It's just if you multiply in a fractal way, like 3 into those numbers, you can back out into pi a lot of times. So it's derived. Some of that cyclical stuff is derived from the higher number. I'm not a math guy, but that's kind of the concept. Yeah. I think I touched that. There's really not much more here, guys. This is just all what we're doing. And we have a 15-person team. Toronto is probably the hub for blockchain, and we have a 15-person team working on building out this Rhythm project. We have a bunch of Ethereum developers. Some of our advisors get asked to speak by governments all around the world. We've got a pretty good team we're putting together, and it'd be nice to see that start to be trading on the exchange here soon. And I guess